Trading 360. I'm Nicole Pedalides, live on the floor of the New York Stock Exchange. Time for the big three. Three stocks, three charts, three trades. Ben Lichtenstein takes us through the charts. Here to take us through the trades, Scott Bauer, CEO of Prosper Trading Academy. Great to see you both. We've had big news in the healthcare space this week with Cigna and Humana. But just first, your big picture thoughts, Scott, as we start off a new month. You have Powell speaking, stocks at highs, Santa Claus rally, maybe. I don't know. What's on your mind?
I mean, how do you top what we just went through in November, right? And was this the Santa Claus rally? That's kind of what I'm a little bit concerned about, is that we've gotten a little bit ahead of ourselves. I would love to see a pullback in the market here over the next week or two. I'm not saying anything significant, a couple percent, because we got up here really, really fast, Nicole, and I'm not sure what propels us the rest of the way here. We know the Fed is not going to do anything with rates when they have their meeting in a couple weeks here. We're past earnings season. We have the big jobs number, November jobs number next Friday, a week from today. But, other than the seasonality and, the typical Santa Claus rally, which really doesn't happen until the last few trading days of the month. Most people think it's the entire month of December. I'm just concerned maybe we got a little bit ahead of ourselves.
Okay. We had the big news, Cigna, Humana. You said you're looking more at Cigna for this trade. Why?
I am, and I'm a little bit bummed about this one, because when I sent this idea to you guys about an hour ago, the trade looked just fantastic. Now Cigna is up about $10 since then. The bottom line is, when I see an opportunity in the market based on some news announcement, and I'm not necessarily talking about earnings, but this news came out a couple days ago, Cigna, Humana possibly merging. Both stocks got hit. Both stocks got hit, by a big amount, and they both came down to some pretty significant support. So what I was looking at specifically in Cigna was this big support here, and I was looking, and we actually did this, at selling a put spread and selling the December 15th 260, 255 put spread for about $2. I use a spread because just in case I'm wrong and the stock keeps going in that direction, I'm stopped out, so I know what my risk is. So unfortunately, that opportunity is not there right now. But if the stock does happen to come back down, I'll probably jump on it again. But this is more a situation of when news comes out and maybe there is a quick reaction. That's a real snap overbought or oversold condition in this one. That's what I was looking at.
Understood. And we know when you sent the trade ahead of everybody else trying to jump on board. We appreciate that. We have time prints on these emails. Ben, Perfect. Your thoughts on the Cigna chart?
Well, Nicole, we have seen a bit of a snapback, still in a bit of a downtrend here, though. And let's get into the charts here. First and foremost, I want to start with the 5-minute candles here, because we have rallied off the lows, but you can see on the left side of the screen that it was, just a couple days ago, earlier this week, that we were trading up around 286 down to 259. A couple areas of consolidation that form that we can use to kind of provide us a bit of a reference point. And, well, actually 3 areas, 284, 274, and 260. Now we're starting to inch our way up. This is not what the bulls, or I should say the bears, were looking for, right? In this trend low on the 5-minute candles, they were looking for further weakness. They wanted us to take out 259 and then see a new area of value form at a lower level. In this case, we're kind of reversing and starting to inch our way back up, but still holding below 274. So that's key. And I think as long as we do, bears still appear to be in charge in this instance. Again, 5-minute candles, but taking a step back, you're going to see that's the case also as we look at the hourly candles. And again, we're going back to earnings when stock was trading up around 320. We've seen high conviction on the downside. You can see the most recent move lower, really adding momentum and steam to this trend lower that we've seen. And as I look at this, I can see areas of consolidation. And again, kind of what we were talking about in terms of that 5-minute candle chart. No real rejection of these areas yet. You need to get above 284 on the hourly before you can kind of reverse that working assumption that value is moving at lower and lower levels. And while this is a spike up, again, as I mentioned, not necessarily what the bears were looking for, it's still feeds into and lends itself to kind of supporting some of that overlapping rotational price activity, similar to what we saw here over the last couple weeks prior to the breakdown. Now, the daily, there's not a lot of continuity there in terms of this narrative, that bearish narrative on the 5, on the hourly candle chart. So I went ahead and just took a step back and I wanted to show you what's going on, because this move lower that we just saw took out the 200-day moving average. I think that's significant. We've got RSI, which has come off. Now, it's rolling off of that low here a bit, but this is going to be something to watch here, Nicole. If we do see energy through the middle of this range that we've been in all year, it opens up a door for a retest of that 240 level. So again, not what the bulls wanted to see here for sure in this instance here, but range bound and contained, just bearish pattern on that more granular 5 and that hourly intermediate time frame.
All right, thank you for that. What'd you think of those charts there, Scott?
Oh, I totally agree, and that's why the trade that I had sent that I'm discussing is very short term, right? This is not an investment. I'm not saying, you know, necessarily buy Cigna at the 260 or 265 level to hold for the longer term. This is solely based on this snap reaction to this news and looking for a little bit of a gain back, which we've got.
Yeah, this week it's down 5%. Let's get right now to your second one here, and that is Qualcomm. Your thoughts there?
Yeah, so they filled the gap on the Apple 5G news, but they've struggled really to break out beyond the recent swing highs. The short-term trend, there's no question. The short-term trend is definitely bullish. But if it starts to roll over a little bit, you know, if we do start to get a pullback in the overall market here a little bit, anything under the 20-day SMA, which is right around 125, can absolutely lead to a deeper pullback around 117 or so. So I'm not doing anything right here, but I'd be looking to close, you know, that fade and be a buyer down there. Now, volatility, option volatility, implied vol is really, really cheap. It's as cheap as it has been in 2 years. So what I'm looking to do is actually go out and buy the December 29th expiration. I'm giving it the entire month, 125 puts outright. If the stock does start to drop down, I'll turn that into a spread. If not, if this bullish condition, if this bullish pattern continues, I'm stopping myself out right away. But I do think, especially if we get a little bit of a turn in the market here, this thing can see 117 pretty quickly.
Okay, are you watching the same, Ben, when you look at that Qualcomm chart?
Absolutely. Scott's dialed it on the right levels here, I think. He's right. We have seen a bit of a bullish pattern on the more intermediate time frame, and that's an hourly candle chart behind me. I mean, there's no denying that rally that we've been seeing. But as we step away from the hourly candle chart, when we do, you're going to see we're still in a bit of a downtrend on the daily, and just possibly back to a key area of resistance right now where the bears might want to step in and kind of dip their toe in terms of trying to participate with the trend here. So taking a look here, first and foremost, the rally we've seen, we're going back to earnings when, well, we were trading around 103, 104 into the news. You see a high conviction move up, and kind of these areas of consolidation have been more a bit of a drift higher rather than that really well-defined horizontal development until we went into the most recent phase here. Let me show you what my eye was drawn to in terms of some of these areas that establish themselves on the way up so that we can determine not only bottom left, top right, trending higher, but the values moving higher, right? It also gives us a reference in terms of an area to determine if that's no longer a working assumption. In this case here, we're currently balancing around 128. The way I see it, as long as we hold above 123 on this hourly candle pattern here, hourly candle chart, we are in a bullish pattern. But take out 123, and that would be supportive of what Scott was talking about in terms of feeding into if we start to see some weakness, because as I mentioned here, we're right near the upper extreme of a range that we've been in, testing key highs that we've seen all the way since the beginning of the year, right up around this 135, 140 area. Now, if we take it out, this is actually going to be encouraging for the bulls, right? Because they haven't really seen much to get excited about all year. Take out 140, you start to form a bit of a bottoming pattern, but still in a downtrend until we take out 140. And should you get below 120, guys, unfortunately, you open up a door for those lows that we saw back in May, a retest thereof. Let's take one more step back, because again, on this chart, the daily didn't provide a lot of clarity for me. You can see that kind of sideways consolidation, but Scott mentioned the 20-day moving average, so I wanted to get this on the chart. I moved, normally we look at the 50 in this blue line here, but you can see it's above the 20, holding above the 200-day moving average has basically been flatlining. RSIs is showing some enthusiasm here as we've gotten above the highs that we saw back in July. Let's see if price can participate.
Anything on that one, Scott, before I get to Meta?
Yeah, Ben and I are on the same page, so look out. Normally we have a little bit, differing opinions, but no, I agree. And bullish pattern here. If the stock keeps going up, I stop myself out real quick, but I think the opportunity is here for a big pullback.
And then last but not least, Meta's come off that recent high. You're actually watching the moving averages very closely. Why is that?
Yeah, and it's not there yet, but if the stock does continue to drift its way back down near the 50-day moving average, that's down around the 316 area or so, I am jumping in with both feet. Like Qualcomm, implied volatility, option volatility is so incredibly cheap right now. It's as cheap as it's been in a couple years. I would expect that to tick up if the stock does keep trending down, but I would be looking for an entry in the 316 to 318 area in Meta, and depending on implied vol at the time, if it gets down there, I would either look to sell a put spread if vol has increased and option premium has gotten expensive, or I'd buy a call spread if vol is somewhere near where it is right now. So kind of in no man's land at this point right now, but that is the area that I am looking at, because that 50-day moving average, if you look at it as it has risen over the last 6 months or so, that has been some really major support in this stock.
Okay, thank you for that. And let's see if it gets to that area where you want to buy it, that 316 level. Ben, your thoughts?
Scott, give me a second. We're going to look at that 50-day moving average. But first, I wanted to show you what's going on, because it's kind of a mixed bag in terms of the two names we were talking about, and also in terms of time frame here. Meta shares of META, as you can see, have been on the trend, or in a trend lower environment. 342 going back to last week's highs, all the way down to the lows that we just recently saw. We're coming off them around this 320 area. Now, went ahead and identified the areas of consolidation that were forming lower and lower on the way down, just so we could have this visual reference and determine, as long as areas continue to form at areas below the current one, then, well, it's a valid assumption. The trend's moving lower, right? But if we were to take out 333, because that's the last area prior to the one that we're currently forming, then you'd have to kind of revise that assumption here. Let's take a step back here, because, again, as I always say, there's only so much information you can gather from that 30-minute chart, and as you do, you're going to see a different pattern playing out, right? So that's why it's important to talk time frame specific. The 30-minute trending lower clearly. As you look at the daily candle chart here, we've been trending higher off those lows that we saw back in November, October of last year. Went ahead and identified some of the areas of consolidation that formed on this daily candle chart, trending higher. Currently balancing around 340, as long as we hold above 300. Again, a bullish pattern. Here's that weakness we just looked at. You can see a small blip on the radar relative to this longer-term trend to the upside. Again, very important to be time frame specific when you're talking price activity as stocks, futures, anything really for that matter. Scott mentioned the 50-day moving average. I've got it right here for you. You can see it has been an area of support. As he mentioned, we kind of teetered around it for a little while this fall, but most recently back above. It's going to be interesting to see if it continues to hold. Still well above the 200-day moving average. This is a pretty good representation of what we've seen in terms of that broader market, the NASDAQ, and the strength in some of those individual names, Nicole.
All right, so we'll watch those levels. And Scott, also just when you think about the Magnificent Seven, of which Meta is one of those members of the Magnificent Seven, do you watch the others for much of the same pullbacks and buying opportunities? Are there any other names that jump out at you in that group?
With the seven, I think I don't want to say they've separated a little bit from one another, but I don't know that they're trading hand in hand now as they were 6 months ago, 9 months ago. So yes, I look at them collectively, but I really focus in on an individual stock. And just because I see Meta maybe approaching down to the 50 doesn't mean that, boy, oh boy, one of these others, whether it's Microsoft, Amazon, whatever, that I have to dive in on one of those as well. I've got to be very stock selective, especially, Nicole, at this time of year when we get into the holiday period. Volumes may tend to be a little bit lower. So I'm definitely more stock selective.
All right, thank you for that. Scott Bauer, Ben Lichtenstein for the Big Three today. Appreciate it. Good to see you both.